Okay, good afternoon, everyone in many parts of the world, mostly Southeast Asia and South Asia in here. So thank you for participating in this today's webinar. So I hope you all are safe in good health and in good health. So I appreciate that you are taking time off your busy schedule to join us for this 2 hours event in 2 days in a row. So my name is Nella Henrieti. I'm the task manager for this ADBI e-learning platform and this ADBI Policy Maker E-Training, financial inclusion in the Asia and Pacific. So as you know, this webinar today is part of our ADBI e-learning platform, and that platform has launched since November 2019. So this is our first project to grouping the topic and have more interactive discussion between government official and expert. So I hope all can enjoy the discussion and gain a lot of knowledge and international perspective that you can bring to your home countries. So before we start our webinar, as usual, we would like to explain about housekeeping rules. So we know you may have been familiar with the Zoom program. However, we like to remind you again. So I will ask my colleague, Derek Hondo, to explain the rule to you. Derek, the floor is yours.
Okay, good afternoon, everyone. I'm going to quickly go through the housekeeping rules for both speakers and attendees. So just a reminder for all speakers, please keep your video off and mute your microphones when others are presenting. And you can ask your questions or answer questions from the audience by clicking on the question and answer box in the bottom tab of your screen. And then we also have the chat function where you can chat with the host or other participants and panelists. To share your screen for all speakers, just a reminder, it's the green icon on the bottom panel. And then you can select in the individual application, such as PowerPoint, to share the file that should already be open on your computer. And then don't forget to click the slideshow mode. So again, this is just a quick review of sharing your screen. Click the share button and then select which file you would like to use. And as a reminder for all attendees, we do not have video or audio function for attendees. However, if you would like to ask a question, you could use the question and answer box located on the bottom panel, or raise your hand if you want to discuss something directly with the host or any of the speakers, and we may call on you later on during the Q&A session. Okay, so thank you very much.
Okay, thank you, Derek. So with that, I think please allow me to introduce Dean of ADBI, Dean Tetsushi Sonobe, to formally open our webinar today. So he's before joining ADBI in April 2020, Dean Sonobe has served for 6 years as Vice President of National Graduate Institute for Policy Studies, GRIPS in Tokyo. He's also a recipient of the Nikkei Book Publication Prize and the Masayoshi Ohira Memorial Prize, and a founding board member of the Japanese Association for Development Economics. So Dean Sonobe obtained his PhD in economics from Yale University and BA in economics from the University of Tokyo. So I think without further ado, I'll give the floor to Dean Sonobe. Thank you, Dean Sonobe. The floor.
Thank you, Nella. Derek, I'd like to use the PowerPoint you prepared. So please share that screen. Yeah, welcome to this ADBI Policy Maker E-Training webinar. I thank all participants, government officials from Fiji, the Philippines, Sri Lanka, Uzbekistan, and Thailand for their active participation and taking time from their busy work schedule. I would like to thank also very sincerely the ADBI E-Training contributors and the instructors, including Mr. Robin Newnham Head of Policy Analysis, Alliance for Financial Inclusion, AFI. Kanitha Tambunlelchai, Professor of Faculty of Economics, Chulalongkorn University. And Professor Chaikal Nurakin, Faculty of Economics and Business, Indonesia University. Oh, Chaikal must be my former student. He's a PhD student several years ago. Chaikal, are you okay? I hope I can see you tomorrow. And
yes,
then,
Chaikal will join tomorrow.
Right. Then Peter Morgan, Vice Chair of Research, ADBI. I'd like to thank them for sharing their expertise, lessons, and best practices for strengthening financial inclusion. In this opening remark, I'd like to introduce to you the ADBI E-Training series, which include this policy maker. Oh, just something happened. ADBI Policy Maker E-Training by leading experts, as well as training certificates issued by ADBI for completed courses. The aim is to help learners strengthen their qualifications for development-focused jobs and promotion opportunities in government agencies, international organizations, NGOs, think tanks, and universities, while building policy knowledge to accelerate sustainable and inclusive growth. The COVID-19 outbreak highlighted the importance of e-commerce and being able to work, learn, and teach remotely, drawing increased interest to ADBI e-learning, with regular subscribers skyrocketing to over 32,000 users. Shall we go to the next page? Yes, ADBI e-learning course. Now we have 13 online lecture series. But then among them, these 5 courses are most popular. Energy, economics, environment, and policy. The number in blue color indicates the number of accesses. And then financial globalization, capital flows, and global financial cycle. And then third place is introduction to sustainable development in Asia and the Pacific. And then advancing the digital economy for sustainable growth in Asia. And number 5, achieving sustainable development goals on water and sanitation. Okay, let's go to the next page. This is the site progress, user statistics. So maybe, let's skip this and then go to the next one, please. So we are now launching this new ADBI Policy Maker E-Training pilot. And then first topic is financial inclusion in Asia and the Pacific. So ADBI Policy Maker E-Training is a new initiative offering fixed semester-long capacity building courses on key development topics. So you can choose time. So this is very good for busy people. And then this program is a kind of blending video-based learning via the ADBI e-learning platform and classroom-style instruction and discussion. And also this program provides timely knowledge and experience, sharing for fostering sustainable and inclusive growth amid rapidly changing conditions. And then this 9-week ADBI Policy Maker E-Training course explores the challenges and opportunities related to the advancement of financial inclusion, financial literacy, and financial education as drivers of sustainable development in Asia and the Pacific. with a focus on the role of financial technologies or fintech and their policy implications and also regulatory framework. And then today's webinar is part of this 9-week ADBI Policy Maker E-Training course. I'd like to take this opportunity to encourage all of us to use this training program as a platform to share our views, experiences, and knowledge among ourselves in order to tackle emerging challenges that could hinder our progress towards achieving SDGs. So I'm looking forward to everyone's active participation in the training program, as well as the fruitful discussions and their respective outcomes that we can use for improved policy design in the near future. Yeah, thank you very much.
Thank you very much, Dean Sonobe, and then for your warm welcome, and then to promote our e-learning platform to facilitate capacity building and training for the Asia and Pacific. So for next, we continue to the photo session. I think for this, I hope you all can switch on your video, and Derek will take a photo for all of us. So please switch on your video for everyone, moderators, discussants, speakers. Derek, how we make this screen like full? Oh yeah, here. Okay. So are we ready? Take picture now. Derek, can you answer me?
Yes. Okay. Everyone ready?
Yes.
1, 2, 3. Okay. Again. 1, 2, 3.
Derek, is there many people in the next screen? So you have to take like every screen.
I think I can only see. Okay. I can only see 12 people.
Oh, okay. Okay, it's fine then. Yes. Okay. So now it's done?
Yes.
Okay. Thank you very much, Derek. And then I think for that, we continue. We should start our first session. Here, I will introduce you to our moderator for the first session. He's Mr. Chulju Kim. He's the Deputy Dean of ADBI and my direct supervisor. So before joining ADBI, he was a secretary to the South Korean President for Economic and Financial Affairs. He was a Deputy Minister for Planning and Coordination, Director General of the Economic Policy Bureau, and Director General of the Public Policy Bureau, Ministry of Strategy and Finance. So he has extensive experience in international development, especially with World Bank and the Asian Development Bank. He holds a BA in economics from Seoul National University, and then MS in finance from Georgia State University, USA. So without further ado, Didi Kim, the floor is yours.
Okay, thank you very much, Nella, for the kind introduction. So as introduced, I'm Chulju Kim, Deputy Dean of ADBI. It will be very good to be a moderator for this first session of ADBI Policy Maker E-Training webinar on financial inclusion in Asia. So as we are all aware of, financial inclusion plays a critical role in enabling shared prosperity and is complementary to financial sector objectives of sustainability and integrity. Furthermore, financial inclusion can help poor to manage their day-to-day needs, to better cope with risk, and to undertake investment opportunities that enable them to improve their income and assets. Yet, most economies have largely financially excluded populations, notably women and rural residents. So achieving greater financial inclusion requires a deliberate and coordinated approach to identify relevant obstacles and opportunities and leverage linkage across financial and non-financial policy areas and align the efforts of the wider range of stakeholders. Also, financial inclusion, financial education, and financial regulation are critical factors to achieve financial inclusion. Financial education enables individuals to develop awareness about financial products and services. Moreover, financial literacy helps borrowers to better access their repayment capacity. Financial regulation is another important factor for financial inclusion. In many countries, formal financial institutions such as commercial banks, finance and leasing companies, and insurance companies are governed by regulatory framework with the central bank in charge of the banking regulation. However, the regulatory and supervisory framework for the microfinance institution and other institutions are often very weak compared with those who are formal financial institutions. So this session will touch upon these important topics. First, Dr. Peter Morgan, who is a research head of ADBI and the real expert in this area, will give a presentation on overall picture of financial inclusion and financial literacy and financial education in Asia, followed by a country case of Sri Lanka, presented by Irash Dirjani, the Director, Department of Management of Audit, General Treasury and Ministry of Finance, Economy and Policy Development in Sri Lanka. So after hearing two presentations, we go into questions and answers, including Peter's first comments and feedback on Irash's presentation. So with that, I'll call on Peter for his presentation. So Peter, please make your talks around 15 minutes. Okay, Peter, please.
Okay, Jojo, thanks very much for that kind introduction. I'm delighted to be speaking on this subject of financial inclusion, financial literacy, and financial education. These are areas that we've done a lot of work on at ADBI and I think are quite important. Let's see. I don't see the slides yet, are they? Or shall I share my presentation?
So Nella, Derek, can you prepare the Peter's presentation? Peter?
Right. I can share if that's easier.
Okay. Yeah, we are now seeing this screen.
Yeah, next slide, please. Yeah, so I'll talk a little bit about the definitions and rationale for financial inclusion, the status of financial inclusion in Asia, barriers to financial inclusion, strategies to promote financial inclusion, financial literacy and education, and then some conclusions. Next. So there are various definitions of financial inclusion, although they all sort of point toward generally the same thing. So an early one from Hanek and Jansen in 2010, financial inclusion aims at drawing the unbanked population into the formal financial system so that they have the opportunity to access financial services ranging from savings, payments, and transfers to credit and insurance. Then from Khan 2011 for the Reserve Bank of India, the process of ensuring access to financial services and a timely and adequate credit were needed by vulnerable groups such as weaker sections and low income groups at an affordable cost. It primarily represents access to a bank account backed by deposit insurance, access to affordable credit, and the payment system. And then the World Bank Global Financial Development Review, inclusive financial systems provide individuals and firms with greater access to resources to meet their financial needs, such as savings for retirement, investing in education, capitalizing on business opportunities, and confronting shock. So I think the key point is that it's not just access of any kind, it's access at reasonable costs to reliable services, and in particular, the important aspect is the access of the weaker sections and low-income groups. Next slide. So in terms of the rationale for financial inclusion, the World Bank did a very nice study back in 2014 they concluded that financial inclusion can significantly reduce poverty and boost shared prosperity, but efforts to foster inclusion must be well designed. In the access to basic payments and savings, the evidence on benefits, especially among poor households, is quite supportive. In insurance products, there's also some evidence of a positive impact. For firms, particularly small and young firms that face greater constraints, access to finance is associated with innovation, job creation, and growth. However, in terms of access to microcredit, the data on dozens of microcredit experiments and from other cross-country research paint a rather mixed picture. So it's interesting that microcredit, although it's one of the earlier aspects of financial inclusion policies, still has a somewhat mixed record. Next slide. And going on to the status of financial inclusion, this chart shows on the horizontal scale log GDP per capita, and then we have perhaps the most widely used measure of financial inclusion, which is the percentage of adults with an account at a formal financial institution on the vertical axis. And you can see there's quite a good correlation, although obviously some variance too, but quite an extensive range of values there. Next slide. And in terms of small firms, the line of credit, this is also somewhat related to per capita GDP, but not quite to the same extent. But again, also quite a wide diversity by country. Next slide. In terms of barriers to financial inclusion, there are quite a few, and we divide them to supply side barriers and demand side barriers. So on the supply side, we have first market-driven barriers. For example, small accounts are not economic. Branches in rural areas tend not to be economic. There's a lack of credit data and usable collateral on which to base lending, and a lack of appropriate products. There are also regulatory aspects. There are regulations on the entry and exit into the financial business, capital adequacy and supervisory rules, branch and ATM opening requirements, ID and other documentation requirements, and particularly regulatory requirements for microfinance institutions or MFIs. And in terms of infrastructure, there's a lack of convenient payment systems and a lack of financial institutions. And then on the demand side, we have mainly two, simply lack of knowledge and financial literacy, and that's where the importance of financial literacy comes in, and also lack of trust in the financial system. And in many countries, this can be a significant factor. And then finally, there's a lack of funds, that if people don't have sufficient funds, it may not be economical for them or for banks to take an account from them. Next slide. And there are various strategies to promote financial inclusion. So first, the level of the strategy may vary. Ideally, you'd have a national strategy. Otherwise, it may be driven primarily by central bank or regulatory agencies, and also private institutions and NGOs may have their own strategies. There are various inclusion-oriented financial institutions, such as MFIs, state banks, post office, credit cooperatives, and community organizations. But I think one lesson is that subsidized interest rates should be avoided. And in terms of regulatory approaches, a couple of things I'll mention are proportionate regulation and market-oriented policies. You also have innovative products and services, such as no-frills accounts, agent banking, micro branches, innovative delivery technologies. And here, I think fintech is playing a very important role. So you have vehicles such as mobile phones and e-money. And you also need innovative systems to enhance credit access, such as credit databases, expansion of eligible collateral, and innovative investment vehicles, such as hometown investment trusts. Next. And I think a national strategy is quite important. It allows the country to set targets and priorities. It also sets up a structure to coordinate a combination of financial education, consumer protection, and supervision regulation, which is we call the tripod, and I'll come back to that. It assigns responsibilities to the various ministries and other agencies involved, and it establishes mechanisms for inputs from all major stakeholders, such as the private sector or NGOs. Within Southeast Asia, Indonesia, Philippines, and Thailand are relatively advanced in this area. Next. There are various regulatory innovations to promote financial inclusion. ID requirements, either you can ease the requirements or go into a national ID system as India has done. Promotion of access, such as linking rural branch establishment with new urban branches, micro branches, a promotion of fintech, sectoral lending quotas, proportionate regulation based on lower systemic risk, development of regulatory frameworks for mobile phones and e-money, regulation, registration of money lenders, and consumer protection, especially in the case of money lenders. Next. As I mentioned, financial access needs to be promoted in ways that are aligned with economic returns. Some traditional promotion methods, such as lending quotas and subsidies, have not been that successful. On the other hand, we find that a thriving microfinance sector is a major element of the strategy, but regulatory consistency is also needed. Some countries have a variety of different regulatory agencies for different kinds of institutions, and that tends not to work so well. Next. And also, as I mentioned, microfinance entities should be regulated proportionally in line with their financial systemic risk. So the costs of regulation should be balanced with the risks and benefits. And in particular, the microfinance institutions tend to be small and hence have less financial systemic risk. So there's a need to adjust prudential norms. And I think it does require some cultural change on the part of regulators to deal with MFIs. Next. And as I mentioned, there's a key role for the new delivery technologies, such as fintech. So this includes mobile phone banking, e-money, also things like more recently QR codes. And these can help to overcome the limitations of access in remote areas, but they still need to be squared with the demands for regulation of money laundering and anti-terrorism requirements. And you also have issues of consistent regulation of non-financial entities. And the innovative systems to enhance credit access would include both credit databases for SMEs and extensions of collateral eligibility. Next. And I think there's a need for a coordinated approach. So this is, again, is what we call the tripod: financial education to develop capacity to understand and use financial products and services, consumer protection to guard against abuses and provide redress mechanisms, and regulation supervision to increase trust in financial institutions, both through licensing and supervisory standards. Next. Going on to financial literacy and education, I think there are significant benefits to trying to improve financial literacy. It allows households to make better use, both households and SMEs to make better use of their increased access to finance. And as financial development progresses, greater financial sophistication is required. The aging of populations increases the need for lifetime financial planning. And we find that the higher financial literacy encourages financial development, higher savings, and more access, more allocation to higher return assets. On the other hand, there are some costs that have to be borne in mind. The effectiveness of financial education programs is sometimes unclear. The capacity of teachers and educational systems to deliver may be limited. First, the teachers have to know about financial literacy before they can teach the students. And there may be large costs involved in wide-ranging programs such as financial education in the school curriculum. Next. This chart shows one measure of financial literacy, which comes from the OECD INFE financial literacy survey of adults. So again, we have GDP per capita on the horizontal scale and the financial literacy score on the vertical scale, which is based on about 21 different questions about different aspects of financial literacy. And again, you can see there is a significant correlation with per capita income, but also quite a wide spread. Next slide. So I think as in the case of a national strategy for financial inclusion, there also needs to be a national strategy for financial literacy. And there needs to be first an assessment of the level of financial literacy. Typically, financial literacy levels tend to be low, but the amount of standardized surveys that have been carried out is still somewhat limited. So I think there's a greater need to carry out the standardized surveys of financial literacy like those of the OECD INFE. And then in terms of the financial education strategy, it's important to target different groups, including students, seniors, SMEs, and startup entrepreneurs. Indonesia and the Philippines are relatively advanced in this area. There's a need to include financial education in the school curriculum, although this is one of the biggest challenges. And there's also a need to support lifetime financial planning under conditions of aging societies. Next. And this is just an example of some financial education materials from the State Bank of Pakistan. Next. So in conclusion, financial education can significantly reduce poverty and boost shared prosperity, but efforts must be well designed. There are numerous barriers to financial inclusion, both on the supply and demand sides. A national strategy for financial inclusion with a range of policies can increase access. So you have a variety of institutions, such as MFIs and credit cooperatives, innovative financial products and services, innovative delivery technologies, especially fintech, innovative ways to increase credit access, and there's a need to include all major stakeholders. Financial access needs to be promoted in ways that are aligned with economic returns, with consistent regulation. Microfinance entities should be regulated proportionally in line with financial system risk. And there's a need to coordinate this tripod that I mentioned, consumer protection, regulation, and financial education. Next. Financial education is important, although programs are generally lagging in Asia. Financial literacy can contribute to financial development and higher savings. However, so far, financial literacy scores are generally low, so that more efforts are needed. First, at measurement of financial literacy, and second, development of programs that are broad-based to promote financial education to various target groups, such as students, excluded groups, and SMEs. So let me finish there. Thanks very much.
Okay, thank you very much, Peter, for the comprehensive, very informative presentation on overall picture of financial inclusion, financial education, and also financial regulation. So you also stress out the importance of having national strategy to promote financial inclusion in a country and so on. So that should be the basis for further promote financial inclusion in each country. With that, I'll invite next speaker, who is Ms. Irashi Dibjani, who is a Director, Department of the Management Audit in General Treasury, Ministry of Finance, Economy and Policy Development. She will talk about the country cases of the Sri Lanka on financial inclusion, financial literacy, and financial education. Ms. Director Isha, are you ready? Yeah,
yeah.
You have around 10 minutes.
Okay. Okay. Thank you. Sure. Okay. Hello, I'm Dilhani. Director of Department of Management Audit, Ministry of Finance, Sri Lanka. Today, I'm going to make a presentation on challenges of financial inclusion in Sri Lanka. Next slide, please. Next slide. So first, we will see how the financial inclusion in the world and Sri Lanka. So one criteria to measure the financial inclusion is the bank account penetration. According to the latest global fintech service statistics, in 2017, 31% of world population are excluded from the financial institutions. But in the case of Sri Lanka, 74% of people more than 15 years of age having access to bank account. That means, when considering the world average, Sri Lanka in a good position in the means of the bank account penetration. Next. So, even though the statistics is there, but we will see what financial inclusion is. Several authors have defined the financial inclusion in the different ways. The World Summit of the UN Summit of Management of Millennium Development Goals in 2010 has defined the financial inclusion as the universal access at a reasonable cost to a wide range of financial services. So as we learned, the financial inclusion aims to draw the unbanked population to the formal financial system in the country. Next slide. Next slide. So when we consider the Sri Lankan financial sector, it consists of three main pillars: the formal sector, semi-formal sector, and the informal sector. For example, for the formal sector, the licensed commercial banks included to the formal sector, and semi-formal sector, the cooperative societies. The Sri Lankan main poverty alleviation program, we call it Samurdhi, coming under the semi-formal sector. And also we can see that the informal sector in the financial service in Sri Lanka. Next. Next slide. Okay. So banking sector support to increase the financial inclusion in the country in several ways. For example, introducing technical-based products and increasing the ATMs and increasing bank branches. In Sri Lanka in 2019, 42 bank branches were opened and also 564 ATMs were established during the 2019 by giving support to increase financial inclusion in the country. Next slide. So when we talk about the performance of the banking sector dominates the financial sector, accounting for 62% of total assets in the financial system in Sri Lanka. That means, so the finance sector operate in a good standard in Sri Lanka. Even though they are operating good standard, the adverse economic impact of COVID-19 pandemic would reflect the financial sector during the 2020 because during the COVID period, most people lost their income. So as a consequence of the lost their income, they were unable to make the savings. At the same time, they were unable to make their loan repayment during that time. And that also caused to increase the non-performing loans of the banking sector. So the COVID-19 pandemic affected the Sri Lanka, the banking sector, as other countries in the world. Next slide. So in this table, I'm going to explain the financial inclusion versus income level. This data was taken at the global Findex database. So we can see the positive relationship from income level and bank account penetration. So in our previous lecture, we also heard that there is a positive correlation between per capita income and the bank account penetration. So in upper income countries, they have near 100% bank account penetration. But in the case of low income countries like Central Africa, Congo, it's actually it's less than 25%. Next slide. So when we compare the Sri Lankan data with Asian region and the world data, so in the means of bank account penetration, Sri Lanka recorded 74%, India is 80%. So the regional average is 70% and world average is 69%. So Sri Lanka could become the second highest in the Asian region and also higher to the world average. Even though in means of bank account penetration, Sri Lanka has recorded a higher position, but use of fintech techniques, so the fintech techniques, it's not considerably in high position in Sri Lanka. For an example, use of internet to pay bills and use internet to buy something online or the credit card. So it's give a considerably low percentage. But it's also in Asian region, it's quite okay. But when compared to the world, it's actually low position. We can see the use of fintech service in Sri Lanka, even though we have a high bank account penetration in the country. Next slide. So by looking at those two tables, and some highlights of the findings are, so it has shown a drop use in bank account in 2017 when compared to 2014. In 2014, the bank account penetration was 83% in Sri Lanka, but in 2017, it has dropped up to 74%. So we have to consider the reason why this was happened. And next one is, irrespective of the level of the income in Sri Lanka and India have recorded 74% and 80% of bank account penetration in 2017. By being the Sri Lanka as the second highest in Asian region and being higher to the regional average. So, what I told earlier is there is a correlation between income level and bank account penetration, but Sri Lanka categorized as a lower middle income country, even though they have the higher, considerably higher bank account penetration. So when we consider the fintech services, some highlighted points are the all online transaction and mobile activities. When doing online transaction and mobile activities, male are prominent than the female, and also young adults are prominent than the older adults, and secondary education people are more prominent than primary education people when look at the data of global fintechs database. Next slide. Yeah. So here I'm going to point out some issues, other issues in financial inclusion in Sri Lanka. So we can see that there is an increase of informal financial services in Sri Lanka that may be happen due to lack of consideration by formal financial institutions for the poor people with low income levels, because the financial institutions are not so closer to the poor people in Sri Lanka. Then the hardness of process to be followed due to the lower level of education, then they are reluctant to go for the bank and get a loan. That's why they go for the informal sector for borrowings, and consequence is that the high borrowing costs for the borrower. And another issue is the recent past few financial companies were collapsed due to various reasons, and that may be the inadequate supervision by the Central Bank of Sri Lanka, and also that happened to affect the trust of financial institution, and therefore the Central Bank should get necessary action to build a trust on financial service in Sri Lanka. Next slide.
Dr. Tilani, can you wrap up your presentation in around 1 or 2 minutes?
Okay. So COVID-19 also affect to the financial system in Sri Lanka. So as I explained earlier, but the good point is pandemic situation has identified as a game changer for the digital financial service. And Sri Lanka also doing practice some online payment and e-channeling during the COVID-19 period. Next slide, please. Next slide, please. So by considering all the issues, I recommend following things: formulate, implement a national financial inclusion strategy for the country, and it should be covered to impact informal financial sector to the formal financial sector, and necessary steps to build trust on the financial services, and also increase the financial education, because the decision will affect to the knowledge we learn in area of finance, and accelerate the use of fintech services and digital banking facilities. That's my presentation. Thank you.
Thank you very much, Director Tiljani. Very, very informative, comprehensive presentation on the financial inclusion practices and strategy in the Sri Lanka. So before, now it's time to go into question and answer session, but before the opening to the floor, then let me ask Peter to provide some feedback and comments on the Sri Lankan cases under your framework overall the financial inclusion strategy. Peter.
Yes, thanks very much. Very comprehensive.
Your feedback around 5 minutes.
Okay, yes. Yeah, I think it was a very comprehensive discussion of some of the issues that I raised in my introduction, although it did raise a number of questions too. I mean, the first question was, even though the penetration rate of bank accounts is relatively high at 74%, it was striking that it dropped from the 2014 level of over 80%. So it would be interesting to get more insight into why that was. Also, there was not much discussion of SME finance. I think it focused primarily on individuals. The presentation did show a large number of different kinds of financial institutions which are in that space, both the banking related and some of the relatively less formal ones. But I would be interested in learning a bit more on how they are regulated. Are they regulated primarily by the central bank, or are there other regulators involved too? And the lack of trust was mentioned, and that suggests that there could be issues with the regulatory regime there. She also mentioned increases in the number of branch outlets and ATMs, but I'm wondering, what's the distribution between urban and rural areas? Typically, there's a much greater tendency for banks to keep branches and ATMs in the urban areas where there's more business. So I'm just wondering if there are any policies as part of the financial inclusion strategy to try to encourage the placement of more branches and ATMs in the rural areas to increase financial access. Also was noted that the use of fintech is still very low, although mobile phone use was slightly higher. And I think that could be partly explained by the fact that the traditional banking sector already has a fair amount of penetration at 74%, but one still wonders if there may be other factors which are limiting the penetration of various kinds of fintech services, whether they might be issues with the internet infrastructure itself. There might be regulatory issues which make it difficult to enter the fintech space. Would be interested in knowing about that. And she mentioned that COVID-19 is certainly a factor which could tend to accelerate the use of fintech. I think it's clear that fintech allows you to make sort of hands-off transactions. You can make transactions at a distance, and also you don't have to use cash. And cash is also perhaps a bit suspect these days as a possible source of infection. I didn't see much discussion of financial literacy and financial education. So I would certainly agree that there's a need for a financial inclusion, a national strategy, but I would suggest that at least as part of that, there needs to be a national strategy on financial literacy and financial education too. So I think it would be very useful to include more discussion of that. I don't know, I'm not aware that there's been any standardized survey of financial literacy in Sri Lanka. It would be quite interesting to find the results if there has been one. And if there hasn't, then maybe ADBI could help to carry out such a survey, because we have done that in a number of other countries, including Cambodia, Vietnam, and Laos PDR. So let me stop there. Thanks very much.
Okay, thank you, Peter, for very comprehensive, comments and feedback to Sri Lankan cases. So I would like to give the Director Dirhani to respond to the Peter's comment briefly.
Yes. I didn't touch in my presentation the SME sector, but I hope to touch in my final midterm paper. And actually, I didn't touch the financial literacy and education also. So yeah, we'll cover all those things in the final term paper. So, and yeah, actually, ADBI is as Peter Bargon said, the ADBI is willing to facilitate Sri Lanka to do a survey. So actually, I think it's a good point. And in Sri Lanka, we don't conduct much survey in this field. I think so that support will facilitate us to do more research and find solution for the real issues and help them make in the policy making process in the country.
Okay, thank you very much. Now let me open the floor for the questions. So I have received a couple of the questions. So first, I would like these questions to direct these questions to Peter Morgan. So this is a question from the Dan Ayer. The question is the microfinance institutions charge high interest rate normally, and then how could the poor and the marginalized population access to financial services in their cases? The second question also to Peter is that you mentioned the three countries, Indonesia, Philippines, and Thailand, which are advanced in the area of the national strategy in the financial inclusion. So can you please cite some specific examples or good practices or policies to give some lessons to other countries?
Okay, well, first on the question of interest rates, I think that's a very controversial issue. I mean, clearly, when you're lending to individuals in poor areas, there is a higher degree of risk. There's less information, and so the MFIs are I mean, quite a few MFIs, not all of them, are essentially run as businesses, and so they do have to make a return which covers those various kinds of costs and risks. But typically, even if the interest rate is somewhat higher, let's say in the range of 15 to 25%, that I think is not so high that it would necessarily crowd out the borrowers from that access to credit. Now, if you're talking about, let's say, money lenders or pawnbrokers, that sort of thing, they potentially charge much higher interest rates. Even in Japan, it used to be that the maximum interest rate charged by money lenders was like 100%. So that in comparison with those kinds of rates, let's say something in the range of 15 to 25% is not necessarily so onerous. Yeah, in terms of the national strategies, I think it's one would have to go through them in some detail to try to say what particular elements might be applicable to other countries. But I know the Philippines, for example, has been one of the champions of this idea of proportionate regulation, that you don't need to regulate MFIs in the same way that you regulate banks, that you can be much easier in terms of capital requirements, reporting requirements, that sort of thing. So I think the Philippine experiment in that area has been generally pretty highly regarded. Now, of course, the Philippines faces lots of other issues, as it, like Indonesia, is an archipelagic country, lots of islands, and so communication is very difficult. And so even with, I think, relatively highly rated financial inclusion policies, the actual degree of financial inclusion in the Philippines is still somewhat low. And I think the bank account penetration is still somewhat in the 30% range. And so it certainly helps to have a national financial inclusion strategy, but it's not a panacea either.
Okay, thank you very much. Now I have a question from Jaya Yung Mahat, Jorex Jorba, who wants to speak directly. Nella, can you make arrangement for him to speak?
Yes, for Mr. Jaya Jung Mahat, actually he put his question on the chat box. So I
Yes.
make him like speak directly. So if he can speak directly. Yes.
Yeah.
Please,
Thank,
please. Yeah.
thank you. Good afternoon, everyone. Thank you for the seminar. So I was just wondering, because I mean, like in case of South Asia, I think private sector is often not a favored world in terms of implementing government policies. So when it comes to fintech, I think COVID has definitely changed a lot and shown the government that, okay, private sector too can help the government to participate in policy making, and also in case of implementing those policies. And again, when it comes to fintech, I think compared to government, I think many of the private sector stakeholders are pretty active in these areas. So how the government has been collaborating with this private sector partners and stakeholders to make some policies and also implement those policies to better benefit not only the private sector but also the governments as well in the region. Thank you.
So your question is directed to Director.
Yeah, so I wanted to ask the question to Madam Dilhani, but
Okay,
it seems she is not in the panel at the moment. So anyone feel free to go
first,
ahead.
I'll give the chance to the Director Dilhani. Regarding the private sector, the law in the promoting the fintech.
Yeah. In Sri Lanka, government also, in Sri Lanka, we have a e-government program. When considering e-government program, Sri Lanka stand at the 85th position out of 193 in world ranking. So Sri Lankan government also introducing the e-services for the citizen. They have initiated it now, but Sri Lanka it's a world leader in the Asian region also. So what government is to provide the infrastructure facilities to start up those things, the basic policy making, what policies need to run those services. So even when considering the banking sector, the private banks are more it's leading that process. But in our area, so in our country, some bankers are the semi-formal sector called the Samuddi Bank or the Sanasa Bank. They do not touch that fintech services in providing the services. So by when providing a service for the country as equal, so government should provide infrastructure facilities. Especially in Sri Lanka, only 34% people using internet. And when promoting those fintech techniques, so the ground should be provided by the government. It's their responsibility.
Okay, thank you very much. So Peter, you have a point to add?
Yeah, I think there are two main ways that the government can be involved. First, as Mr. Hani mentioned, is the infrastructure of the internet system there, and then that would also include the mobile phone system. But the other aspect is the regulatory environment, because typically fintech firms are providing services which don't necessarily fit neatly into the traditional regulatory categories. They may not actually be banks. And so the question is, how do you treat, for example, payment services which might be offered through a telecommunications company? How do you treat P2P lending platforms? Do you have some sort of regulatory system for them? So I think that and there's also an issue of the capacity of the regulators to deal with these more innovative financial services and companies. One approach that's been taken in some countries is to adopt so-called regulatory sandboxes, where you start out at a relatively small scale, but with a relatively liberal regulatory regime, just to see how the new service works. And then if it works well, you can sort of integrate it into the overall regulatory structure in a more permanent way. But it's a big challenge because it's a rapidly developing area. There are all kinds of different services within fintech. You have also issues with crypto assets, cryptocurrencies, that kind of thing. And you have these requirements of things like consumer protection, anti-money laundering, et cetera, et cetera. So it's a complicated field, but the government does need to provide some leadership in terms of the regulatory environment.
Okay, thank you very much. There is another question from the audience is regarding the, so Peter, this I think this the question to Peter. As for the infrastructure, when you talked about infrastructure of the promoting the financial inclusion, so does this mean the capability of the financial institution to undertake international transactions too?
In terms of the, well, for the infrastructure for international financial transactions is already there in terms of, SWIFT, things like that. Now there are innovative ways, for example, to do remittances. I mean, one of the big issues of remittances traditionally has been their high cost. I think the average cost globally is still estimated to be around 7% of the remitted amount. So that there are innovative fintech services which are aiming to cut those costs quite significantly, and those could be either through banks or through other kinds of intermediaries too.
Okay, thank you very much. So for the interest of time, finally, I'll ask Director Tilani on the national strategy of the financial inclusion. So Peter mentioned the importance of having such national strategy. So how is the situation in Sri Lanka?
So yeah, as I studied, the strategy is formulated. They have started in 2019.
Okay.
Yeah, they are starting it and.
How is the implementation?
Sorry.
How is the implementation of the strategy?
Yeah. So national strategies, they are now formulating.
Being formulated. Okay.
Yeah.
Okay.
In 2019, they have started it.
Okay. They started now. Okay. So but maybe Sri Lanka can learn the lessons from the other countries. The advanced
already.
Yeah. So in Philippines and Thailand and Indonesia and so on. So also the Peter has lots of the kind of the examples of the best practices you can refer to those international best practices and so on. So we can work together to help the formulating such national strategies. Okay, thank you very much. So I'm sure that you have many questions, but the time is limited. So I think now it is time to close this session. Thank you very much for the excellent presentation, Peter and Dr. Dilani, and then also the answering the questions from the floor, and then the Peter and then others. Again, thank you very much for your active participation. Thank you very much. Now let me turn to the Derek. Derek or Nella?
Derek, okay. So thank you very much, Didi Kim. I think we move now to session 2. So I think I don't have to introduce myself anymore. I'm gonna be a moderator in the session 2. So as you know, I'm a task manager for the project for this project, and I also senior economist on the CBT department in ADBI. So welcome to the session 2. As we listen to the first session, we know that financial inclusion is very important, especially for developing member countries. And then countries should design strategies, as Peter said, that to improve that financial inclusion. This includes regulation, financial technology, infrastructure for that, and then national strategy, coordinated approach, and then how microfinance sector, is key, also key factor to promote financial inclusion. So, and then we have our speaker that give a global perspective of financial inclusion. That's Mr. Robin Newnham. He will talk about financial inclusion, evolution, and contemporary challenge. And then after that, we will have a country presentation from the Philippines, Mr. Roberto Miguel Dima Culangan. So he will talk about the challenge toward a robust digital economy, a study of financial inclusion landscape in the Philippines amid the COVID-19 pandemic. So, and then after the two speakers are talking, then there's a discussion. Robin will give feedback to Philippines, and we will open the floor to a question and answer. So don't forget to put your question in the Q&A box, and then we will monitor that. So, so that's first, I will introduce Mr. Robin Newnham. He is the head of Policy Analysis Alliance for Financial Inclusion. Robin has joined the AFI since 2011 and has supported AFI membership of policy makers from more than 90 countries. So he leads AFI engagement with global standard setting bodies and DG20 to ensure representation of AFI members' perspective in the key global fora. So before joining AFI, Robin had various positions in the UK Treasury over a 7-year period. So he holds degrees in international relations and modern history from the University of Oxford. So Robin, you will have 15 minutes, and I will inform you when the time almost finished, like 1 minute left. So without further ado, I will give the floor to Robin. Thank you. Robin, the floor is yours.
Thank you very much for the kind introduction, and also to the ADBI for the invitation to speak at today's webinar. And congratulations, by the way, on reaching 30,000 plus subscribers for your e-learning programs. That's a really fantastic achievement to hear about. So if I could go to the first slide, please. So in the next 15 minutes, I'll be going through a little bit around why financial inclusion matters and how it contributes especially to the Sustainable Development Goals, a little on which countries are making progress and how the role of policy and regulation. And then finally, I'd like to spend a little time on some of the complex challenges that we're still facing today, especially ensuring that financial inclusion leaves no one behind, that we can fully leverage technological innovation to achieve inclusion objectives. And finally, of course, the role that financial inclusion may play in today's context in mitigating the impact of the COVID-19 pandemic. Next slide, please. So just looking a little bit at the origins, and this was covered quite well in the last session, so it'll be relatively brief here, but we've heard that there is no one single definition of financial inclusion. Each country may have its own slight variant. However, there are common elements, and essentially the goal of financial inclusion is to enable the whole population to have access to formal financial services that do meet their needs, both their day-to-day money management needs, but also helping them to plan for the future and to live healthy financial lives. The first usage of the term financial inclusion was actually in the UK around the turn of the century, where it was regarded as a pillar of a broader social inclusion strategy. And then the first developing country to use the term was India in 2006 in establishing a government committee to develop a national strategy. At that time, the dominant paradigm, if you like, for many developing countries was microfinance. And in looking at the shift from microfinance to financial inclusion, the sort of evolution, I think we can distill three main differences. First, there's a bit of an emphasis away from separate bespoke products for the poor, which will still, of course, do still have a role, but more focus on designing the financial system as a whole to be inclusive and sustainable. And then secondly, related to that, a greater emphasis on the transformative potential of technological innovation, beginning with mobile money and agent banking, and now, of course, extending into fintech and various regtech innovations as well. And thirdly, we started to see a much greater focus on the role of policy and regulation, which of course is really key to enabling technological innovation to safely develop and to realize inclusion goals. As was mentioned in the last session, there's really three key dimensions of financial inclusion: access, which is making sure everyone has at a minimum a bank account or a mobile money account, but also that those accounts are being used to really meet people's financial goals. Some countries have struggled with high levels of dormancy, where we can see that that's not really happening. And then the quality dimension brings in the notions of consumer protection, the cost of products, and also notions of choice available to consumers as well. Numerous studies have highlighted the major benefits of financial inclusion, both at the microeconomic and the macroeconomic level. The IMF put out a study in 2015 showing the link between financial inclusion and economic growth overall, and numerous research studies have shown the contribution to poverty alleviation at the microeconomic level. Next slide, please. When the Sustainable Development Goals were adopted in 2015, we can see that financial inclusion is not one of the goals, but it's rather positioned as an enabler to achieving multiple goals.
Robin, your voice can like cut off. I mean, is there something with your connection?
Sorry, can you hear me okay?
Yeah, now
No?
it's okay.
Okay, I'll try to make sure the microphone is closed. So financial inclusion has been positioned as an enabler for multiple of the Sustainable Development Goals, especially there's a strong link to poverty alleviation, but also given many more women are excluded from the system than men, there's a strong link to gender equality, Goal 5 as well. And also in today's context of the pandemic, there's a linkage as well to SDG 3 on good health and well-being. Access to financial services can enable people to have insurance and savings products that do provide a cushion in the event of adverse health impacts. I'll go on to the next slide, please, now. So as we've heard about already, the main source of data for cross-country comparison is the World Bank Findex. It's not perfect and does need to be supplemented by national data collection efforts, but it gives us a good indication of the direction of travel. And we can see that there has been consistent growth in access to accounts since the Findex started back in 2011. Albeit it's important to note that the growth between 2014 and 2017 was a little less than the growth between 2011 and 2014. So that suggests that as we do get to higher levels of account penetration, we may need to have specific efforts to actually reach last mile consumers and make sure that everyone is brought into the formal regulated system. You can see generally there's been progress, especially fast progress in sub-Saharan Africa, which the tremendous growth of mobile money is really behind. Slightly slower progress in Latin America and in East Asia. But it's also important to note there's quite wide variation in country performance, with some achieving rapid growth and others sort of staying where they are. If I could go to the next slide, please. So 3 countries really stand out when you look at the data on access to accounts and transformative change. Kenya, I think the story is quite well known of the launch of the first mobile money product, M-Pesa, back in 2007, facilitated by the central bank granting a letter of no objection to Safaricom, the mobile network operator behind M-Pesa, and then later e-regulations came in as well to facilitate further growth. And M-Pesa has really been the platform that now many other financial services have linked onto. So using mobile money, you can now access credit, savings, even investments in government bonds through that mobile money channel. In India, the story has been a little bit different, and the tremendous growth in access has been driven by the rollout of Aadhaar, the unique biometric national identity, and then utilizing that for opening of bank accounts through electronic KYC processes and paying government social transfers into those accounts. So that has driven a tremendous growth. Albeit there is still a big problem of account dormancy in India, and there is a lot to do to still leverage this access channel to create a full digital payments ecosystem. In China, the story was a little bit different. Account penetration was higher, but with quite limited value-added services available to consumers. The big tech platforms and financial and also Tencent have come in as major players and built onto that access by providing extensive payments functionality, making of instant loans using artificial intelligence and so forth. So China, you could say today, is almost the most complete digital finance ecosystem anywhere in the world, and it's very hard to actually make a cash payment there, especially in cities like Beijing or Shanghai. Moving on to the next slide, please. So as we've already heard from Peter's presentation, regulation and policy has played a very important role in driving growth. In the Maya Declaration adopted by AFI's membership, 5 key building blocks of regulation were identified that you can see here on the slide. And they've now driven the implementation of more than 500 policy changes that we have documented by central banks and ministries of finance across the AFI network. And that's really the main means by which we evaluate our impact as a network, is looking at the policy changes members are implementing and how each one of them is contributing to financial inclusion goals. Next slide, please. We already heard a little about national strategies in the previous presentation, and certainly there does seem to be a correlation that the 40 or 50 countries that have now adopted national financial inclusion strategies are achieving progress at a faster rate. But of course, it all comes down to the design. So the national strategy needs to be formulated, but also implemented through an inclusive process that's bringing in all of the different public sector agencies, but also the private sector as well. And also key is to have political will behind this process. So many of the national strategies are adopted at the highest level by the President's office, and that can have a key role in driving the necessary buy-in and implementation by the various stakeholders that need to be involved. Going on to the next slide, and this is where I'd like to spend, I think, the remaining 5 minutes I have, is on some of the complex challenges that we are still facing in financial inclusion policy. So go to the next slide, please. And I'll focus firstly on the need to reach some of the groups that are at risk of being left behind, despite the general rising levels of account access that we are seeing. So if we analyze who is still out of the formal financial system, we can see that there are some disadvantaged groups that are disproportionately represented there. First of all, there's a significant gender gap. So almost 1 billion women globally still lack access to a bank or mobile money account. And that gender gap hasn't been coming down very fast over the last few years. So it really does require careful diagnosis and targeted actions to close those gender gaps at the country level. We can see there's also a record number of refugees and forcibly displaced persons globally now, almost 80 million and rising. And there can be particular challenges in the financial inclusion of these groups, especially where they may be coming from conflict zones, where identifying and verifying the consumer is very challenging for the financial service providers. There's also an age dimension. Both youth and older persons tend to be disproportionately excluded. With youth, of course, the challenges of lack of collateral, credit history, but also often lower levels of financial literacy as well. And with older persons, there's a challenge, of course, in helping them to navigate the adjustment to digital financial services, which is becoming increasingly the norm. And finally, there's also disproportionate exclusion levels amongst the 800 million persons living with disabilities in different developing countries, and a number of countries have targeted this group within their national strategies. Next slide, please. Just to touch in a little bit more detail on gender, some of the key policies here are firstly to start by collecting sex disaggregated data, both on the supply side and the demand side. And that's really key to diagnosing exactly how big the challenge is at the country level. But also there's a big challenge to help women adapt to digital financial services. In many countries, we can see that the early users, the early adopters of digital services tend to be disproportionately men. And that suggests that targeted outreach efforts, as well as tackling some difficult sociocultural norms, also become important factors to address if we really want to close those gender gaps globally and in each country. Next slide, please. Looking at youth, this has been a big priority actually this year under Saudi Arabia's G20 presidency. In AFI, we're also coming out with a youth inclusion policy framework later this year. Some countries you can see have made extensive efforts here. In Pakistan, a national financial literacy program has been quite impactful, both in terms of digital, but also physical classroom-based trainings. And you can see the example there also of Zambia conducting an extensive diagnostic of all their regulations and financial products to see to what extent they are reaching children and youth consumers. Next slide, please. Here in, I think especially East Asia, there is a strong concern as well with the inclusion of older people. Japan, under its G20 presidency last year, did really focus on this topic and came out with a set of Fukuoka policy priorities. And again, there's a strong focus here on digitizing pension payments, which could be a gateway to inclusion for older persons. But also in Thailand, we've seen some interesting initiatives, especially rollout of a basic bank account product for senior citizens, and also issuing guidance on reverse mortgages, which can enable older people to access an income stream from their property. Next slide, please. Fintech, of course, has a key role in achieving financial inclusion goals. To help policymakers try to prioritize in this area, in AFI, we published a framework 2 years ago in 2018, based on these 4 key pillars that were developed from our members' experience. So digital identity and eKYC is very important for seamless onboarding, as is interoperable electronic payment systems to avoid the friction of needing to regularly cash in or cash out from those digital systems. The third pillar emphasizes countries having a clear strategy for widespread account opening and digitization of payments. And then the fourth pillar looks at market infrastructure that can facilitate value-added services. Next slide, please.
Robin, may I?
Yes.
Yeah, there's 1 minute left, so maybe you can like summarize.
Okay, maybe I can just actually move forward onto the COVID-19 implications. If you could go to, yeah, next one. Yeah, actually go to the next slide, please. Yes, this one, thank you. So we can see that COVID-19 is probably one of the biggest challenges today that is threatening the financial inclusion progress that has been achieved so far. And I think this is a big risk, especially to the disadvantaged groups, to vulnerable populations, that we may see their exclusion exacerbated, even though there is also an opportunity here in terms of the trend we're seeing towards greater usage of digital financial services and fintech. So the policies that are being implemented by countries now and towards the recovery are really important actually to see whether financial inclusion is held back by COVID-19 or whether we can actually leverage some of the opportunities coming out of this crisis to still advance further with financial inclusion. Just highlight here, this is a tracker we have on the AFI website that's capturing all of the different policy responses countries are implementing. You can see in East Asia and Southeast Asia, there's been a really strong focus on impact on the SME sector and measures to provide liquidity support to SMEs to help them navigate through these challenging times. You can find more detail on this on our website. If I could go forward, please, to the conclusion slide. Yeah, go to the next one. Next one. Yeah, thank you. No, just back one. Yes. So just to summarize, I've tried to demonstrate in the last 15 minutes, we've really seen the evolution of financial inclusion go from perhaps quite a niche topic in policymaking circles to being seen now as a central component of sustainable development and inclusive economic growth, linked to the fulfillment of many of the SDGs. We've seen that significant progress has been made overall, driven both by digital technologies, but also country policy and regulatory environments, national strategies as well. But finally, we've also seen that there are very significant challenges ahead to maintain the rate of progress over the last years, especially to make sure we're paying attention to the needs of women, youth, elderly persons, not leaving anyone behind, but also that policymakers are dealing proactively now with the impact of COVID-19 on financial inclusion and really looking at how they can leverage financial inclusion policies to respond holistically to the current crisis that the whole globe is facing. So I'll leave it there and very happy to answer any questions. Thank you.
Thank you very much, Robin. I think you explained like very good about how countries face challenges to improve their financial inclusion. And I think one point I note in here that that's about technology. Technology now, yeah, has been helping financial inclusion for a while, but now that's also important in this COVID-19. So every aspect of inclusion, especially in education, social assistance, we need a technology. And then we see that a social culture norm and then national strategy also affect how countries implement their financial inclusion. I think there will be many questions later on, and then next we should go to Mr. Roberto Michael Dima Culangan. Michael works at the International Finance Group of the Department of Finance in Manila, Philippines. So before joining government, he was a lawyer in the banking industry, and then Michael graduated from the Ateneo de Manila University in law school, and also from undergraduate degree in management engineering. So he has he's currently taking executive MBA at Asian Institute of Management. I think you have Michael. You have like 10 minutes, and then the floor is yours. Thank you.
Okay, thank you. Am I audible?
Yes. If you can come closer to your microphone, that should be.
Okay.
Yes.
Okay. So good afternoon. So my name is Miguel de Maculangan from the International Finance Group of the Department of Finance in the Philippines. And I will be discussing challenges towards a robust digital economy. It's a study of the financial inclusion landscape in the Philippines amid the COVID-19 pandemic. So if we can proceed to the next slide. Okay. So this is a dashboard provided by the Bangko Sentral ng Pilipinas in 2019. So the overarching principle here is the Philippine Development Plan, wherein the Philippines aspires to cut poverty by 14% in 2022, with 6 million Filipinos rather outside poverty by then. And alongside with it is a long-term plan and aspiration under Ambition Natin 2040 for an inclusive growth and resilient economy. So where is the Philippines now? So the BSP has a digital payments transformation roadmap, which envisions to increase retail payments by 2022. And with this, on the left side of the screen, you can see the numbers that we have as far as banking and financial services are concerned. And on the right side of the screen, we can see the figures as far as telecommunications are concerned. So 95% or 95.4% of local government units in the Philippines have banking presence or at least represented by financial institutions. Also, there is a depositor base of 68.5 million Filipinos out of 108 million. Currently, there are also 12,820 banks in terms of branches and offices scattered around roughly 7,000 islands in the Philippines. As far as telecommunications is concerned, we have a SIM penetration of 159%, with 67% of individuals currently using the internet. And the average time spent by a Filipino on the internet per day is around 9 hours and 40 minutes. So as far as access, usage, and quality is concerned, these numbers would show that the Philippines is quite on the advanced stage as far as financial inclusion is concerned. So let's go to the next slide. Okay, so now with the goal of having a resilient economy and as well as one that is aspires to reduce poverty, given the situation now, specifically we have the COVID-19 pandemic, how can digital payments, how will they be able to mitigate challenges or reduce measures that will inhibit us from achieving those goals? So first, we have the National Payment Systems Act, or Republic Act 11127, which provides a comprehensive legal and regulatory framework supporting the twin objectives of maintaining a payment system that is necessary to control systemic risk, and second, an environment conducive to sustainable growth of the economy. And this NPSA, or the National Payment Systems Act, provides for a regulation wherein operators of payment systems are required to be registered by the Bangko Sentral ng Pilipinas before they can operate to the public. This will ensure a safe, effective, and reliable operations, a payment system in the country. So as of now, there are 104 registered operators of payment systems registered with the BSP. So with this, to highlight is systemic risk. The regulations would like to mitigate systemic risk, which is the risk of failure for payments. So given the COVID-19 pandemic, there are limitations that we have in terms of making transactions, business transactions and payments. And a stringent or a well thought of regulation by the BSP ensures that it's flowing, it's fluid, and there are no systemic risks, issues that will be encountered by these payment systems. So as far as payment systems are concerned, we have two key players here, which are representing the two major telecommunications firms in the country, Globe and PLDT. So we have PayMaya and GCash. So as far as the figures are concerned, for example, in GCash, we have 20 million users rather, and a merchant base of around 17,500. And now, the recent projects of GCash now does not only include digital payment services, but also digital credit services, wherein the public or the users of GCash are already allowed to purchase various commodities through credit. So also we have the National Retail Payment System. So the NRPS promotes, among others, interoperability. The state when end users or consumers are able to transfer funds from one account to another account. So it's a bank-to-bank transfer, which addresses, again, systemic risk, given that the public, they have different bank accounts from different banks, and we want to ensure that payments are made timely, and as well that these are fully implementable and without any other inhibitions. So by enabling interoperability, the sustained adoption of electronic payment is plausible as electronic transfers are made more convenient. So we have two key players here. We have PesoNet and InstaPay. And during the COVID crisis, which is still happening until now, so the figures, for example, from April 2018 to July 2020, so the latest July figures that we have, for PesoNet, there's a year-on-year increase from 118.4 billion to 252.98 billion pesos in terms of the transaction value. And for InstaPay, we have 23.6 billion to a year-on-year increase to 141.2 billion pesos. So also as part of the alignment of this NRPS to the COVID-19, during the ECQ, Enhanced Community Quarantine under the Philippines, they waived, which is still happening until now, they waived the fees for transactions for both InstaPay and PesoNet. So some banks have made a commitment to waive these fees until December of the year, and some banks have just noted that it's until further notice. So next slide, please. Okay, so as far as trade and industry is concerned, we have the Philippine e-commerce roadmap. So the figures here would show that during the community quarantine period, there were around 1,750 business names registered with the Department of Trade and Industry. So that was the baseline figure, which rose to 9,690 in May. So the baseline was around February to March, so which is a 450% increase in the baseline. So the number peaked in June to 33,000 business names, and as it is now, there are around 68,000 business names. So online sellers and MSMEs have increased their opportunities to do business through an online platform because of this registration numbers. So with this is a digital platform, logistics and service provider framework that we have, which shows that there is an easier market access through digital means. And this includes both logistics and selling. So the DTI the Department of Trade and Industry has predicted or believes that this will contribute to 25% of the GDP in the Philippines, tapping around 100,000 MSMEs and tapping around 40 to 50% of the internet users doing e-commerce. So next slide, please. Okay, so another indicator that the Philippines is in the advanced stage of digital economy is the opportunity to participate in capital markets and cryptocurrency through digital means. So currently this year, the Philippines, through the Bureau of Treasury, has issued retail treasury bonds. It's a 5-year RTB with a minimum participation amount of 5,000 pesos. That's very low here in the Philippines. The interest is around 2.625% per annum. So this can be done, or this was done through an online platform, as you can see on the left side of the screen. So also part of the efforts of the Bureau of Treasury is to increase financial literacy and investor base through these platforms. Also, some of the private players, such as Union Bank, they provided an avenue such as bonds.ph, wherein Filipinos can not only enter into the capital markets and purchase retail treasury bills, but also participate in cryptocurrency. So it's partnering with PDAX, which is one of the virtual currency exchanges registered with the Bangko Sentral ng Pilipinas. So also worth mentioning here is in September 8th, which was last week, the personal equity retirement account was relaunched by the Bangko Sentral ng Pilipinas. And this will provide more access for Filipinos for voluntary retirement accounts through digital means. And this is also one of the...
Michael, I think your voice cut off again.
Hello, can you hear me?
Now
is it clear now?
Now it's clear now.
Okay.
Yeah, and then you have 1 minute left, so
okay,
if you can summarize, yeah.
Thank you. So I will go now to the challenges that we have despite us, despite the efforts that we have in the Philippines. So first is the lack of virtual banking regulations. Since the banking sector is now going digital, we have, for example, Simbank Malaysia, a branch in the Philippines, offering a digital platform for credit. Also, the Land Bank of the Philippines has announced that its subsidiary, Overseas Filipino Bank, will allow for a digital platform, a digital bank for overseas Filipino workers. There is still a need for both regulations at the Bangko Sentral level and also legislation to ensure that the public is protected at all times. Also, we have the national ID system. So the national ID system, we already have a law. So that's RA 11055 in 2018. However, the issue here is on the implementation. So currently, there is an effort to launch the national ID system by the fourth quarter of 2020 through 5 million low-income households in the Philippines. And this will ensure that there is better KYC requirements and better access for various financial opportunities and financial products to the public. Also, also another challenge is the registry of personal property. So we have a law for personal property securitization that will expand the collateral base not only for real property but also to include personal property. But the problem here on implementation is there is yet a need to devise a centralized digital registry, which is currently being examined and evaluated at the moment. So finally, another issue will be the National Broadband Plan. So currently, the Philippines is having one of the lowest or the slowest internet speed in the whole world. So in terms of mobile internet speed, we are 103rd. We rank 103rd out of 139 countries. And in terms of fixed line internet, we are 101st out of 179 countries. And as a means to address this issue is the National Broadband Plan was being formulated by the Department of Communications. So it will provide for a means to strengthen the broadband platforms in the Philippines for more accessibility to financial services, and as well as improve the basic standards of living in the Philippines. Thank you.
Okay. Okay, thank you very much, Michael. You explained very comprehensive about the financial inclusion in Philippine challenge, and I think that's very useful for all of us. I think now I give the floor to Robin to give a feedback and to Philippine case. Robin, the floor is yours.
Thank you, and congratulations to Roberto. I think it was a great presentation, very comprehensive and clear on what's been happening in the last couple of years in the Philippines. And I think the Philippines has also always demonstrated a really strong commitment to financial inclusion. Was a founding member of AFI actually, and I think that top-level commitment within the BSP has always been there, and is a commendable example for other countries. That being said, I think to some extent the Philippines has been a little bit of a conundrum, maybe from a digital financial inclusion perspective. If you look across the last 10 years, you can see that the enabling regulatory and policy environment has always really been there, and the BSP was one of the first central banks, I think, to allow mobile network operators as e-money issuers. And yet, for a long time, we never really saw that ignition moment in terms of explosive growth in digital payments compared to other countries like Kenya, even Bangladesh a little bit later on, where mobile money was really taken off. But judging from Roberto's presentation, it seems like that may now be changing fast. And maybe COVID-19 actually is providing the ignition moment to really make digital payments kind of the new normal in the Philippines. There's certainly quite dramatic figures. We can see that in terms of the increased uptake. And of course, only time will tell how much of that will be sustained into the post-pandemic period. But I think the longer the current situation goes on, the likelihood is that this will become ingrained in consumer behavior, and it will just become the new normal way of doing things. I really like the emphasis in what Roberto presented on the digital identity reforms that are being put through, and also the focus on interoperability in digital payments. These are really key elements in AFI's inclusive fintech framework as well, and it's really critical to have that seamless onboarding of consumers, as well as the ability to move funds around the digital ecosystem without frictions and between different wallets and different account providers as well. So it's good to see that taking a central emphasis in the strategy there. Finally, I do just want to highlight on cryptocurrency and virtual assets regulation. I think the BSP has taken an extremely progressive stance here. That's a good example for many other countries. I think there has been concerns globally, of course, with money laundering and terrorist financing risks that come from Bitcoin and other virtual assets. And we've seen the FATF, the Financial Action Task Force, move quite strongly on that. So there is maybe a temptation for countries to deal with that, just to have a sort of knee-jerk reaction and try and prohibit some of this innovation. But in the long run, I think it has to be in everyone's interest to try and get a balance right between integrity and stability on the one hand, but also allowing innovation and inclusion on the other. And I think the Philippines is a really nice example of trying to do that. And hopefully we will see other countries follow suit. And I think in time that will emerge, that will allow financial inclusion use cases to emerge from virtual assets innovation, especially in spaces like cross-border payments, which, as we've heard, are still quite costly and quite inefficient in most remittance corridors in the world. So I'll leave it there with my comments, but congratulations again. I thought it was a very nicely set out presentation.
Thank you, Robin. So Michael, you want to respond to what Robin mentioned?
I just want to thank Sir Robin. So first, I agree that COVID-19 is more of an igniter than an inhibitor as far as digital payments are concerned, the digital economy is concerned. So I might as well have to focus on that when I write my paper. Also, in terms of sustainability, what can be done further to ensure that digital payments will be sustainable in the long run. So for cryptocurrency and virtual assets, I will also integrate the measures that we have in order to address concerns on money laundering, for example, and other perceivable problems that are attributable to cryptocurrency and virtual assets. Thank you, sir.
Thank you, Michael. And then we have two questions here. I think I just mentioned here, so you and Robin can answer. For the collateral and bureaucratic issue, a main obstacle for the poor access to credit. How to overcome these obstacles? So the second one for the Philippines, I think this is for Michael. Some of the hindrance to digital finance inclusion include apprehension of consumers due to security issues tied with digital finance. The second one is lack of education in digital finance or financial literacy in general, especially in this disadvantaged group. So does the BSP or DOF have certain initiative strategies to address this? So I think, yeah, Michael or Robin first. So Robin, I think you first, and then Michael can, yeah.
Sure. So thanks for the questions. I think on collateral, of course, lack of collateral has been one of the big traditional barriers. I think one of the trends we're seeing is towards use of alternative data by credit providers as a replacement for traditional collateral. So we can see in China how that's really developed, where and Financial and Tencent, the tech giants, they're able to facilitate lending, and those lending decisions are taken in a matter of seconds because they use algorithms based on the whole payment history of clients using those platforms. And we see similar in Kenya, where people have been using mobile payment services. Now there's a whole range of digital credit providers that draw on that payments history in order to make the lending decisions without collateral. That being said, of course, these practices are not entirely free of risks, and we have to make sure that the algorithms that are being used, though they're providing efficiency, that they're also fair as well, and that we're not seeing particular groups disadvantaged because of the way such algorithms are designed. So I think that's going to be one of the issues that regulators will need to focus on going forwards.
Thank you, Robin. And now, Michael, you can address both questions.
Okay. So for the first question on the credit, as what was presented a while ago, we have the Personal Property Securities Act, which aims to expand the collateral base not only to real properties, but also personal properties. However, there are still implementation issues as far as the registry is concerned. And I believe there are efforts to expedite the completion of this. Also, for the digital financial inclusion of the hindrances. So I believe that the Bangko Sentral has been very, very strong in terms of customer protection. So they have done a lot of regulations and frameworks to ensure that the public is protected at all times. However, I think that the gap here will be more on how to educate the public further. So while the BSP is very active, and the Department of Finance, we are very active in terms of educating the public. especially those who are the unbanked sector, I think more efforts should be made by the private institutions and banking. So I think it should be a hand-in-hand project by both public and private sectors to be able to fulfill the need to educate the public further. Thank you.
Okay, thank you, Michael. There's another question from Mr. Sakib Noor. I think I give I let him talking. So, Mr. Sakib Noor, if you there, can you unmute your microphone and you just talk? Hello. Okay, if he's not there, so I just read his question. So here, that's to Ms. Robin and to Michael. And how can the financial institution or MFIs reduce the operational costs regarding credit disbursement to an interest payment collection from MSMEs or the targeted unbanked population? Since the loan ticket size is very small compared to that of other financial products, these operational costs sometimes discourage financial institutions or MFIs to come forward in extending loans to the underserved population. Also, ensuring repayment from the clients become a challenge given the high credit risk of the segment. So how can we address this challenge? This is for you both. I think Robin first. Robin, the floor is yours to answer that.
Thanks for the question. And yeah, of course, sustainability in the microfinance sector has been a challenge for a very long time. I think ultimately the question of how to reduce costs, technology has to be a key part of that. And we're seeing quite a lot of countries now trying to digitize their microfinance sector. So really make sure that the microfinance sector is part of those broader digital transformation strategies that they have. And then in the long run, that should be a way to reduce the unit cost of each loan that's being made, and also make for a more seamless repayment process as well. Of course, infrastructure remains very important. For example, having credit bureaus that will allow for easy assessment of creditworthiness, make sure we're not seeing cases of borrowers taking credit lines from 6 or 7 different MFIs simultaneously, which obviously has happened in the past where that credit infrastructure is not sufficiently developed to pick it up. So there's a number of things there, but I think overall linking the microfinance sector more to digital transformation and what is happening there will be key.
Thank you, Robin. And Michael, you want?
Okay, I agree that there should be a significant reduction in costs, and I believe that in the short run, it will be tough. However, in the long run, since there's an investment in an efficient credit system or a credit architecture, the benefits will outlive in the future. Also, as far as revenues are concerned, I guess one of the key business decisions should be to increase the revenue base. So you have to increase the lending public, the borrowing public rather, so that you will reach a point that it will be already beneficial at a business perspective to the company. Thank you.
Okay, thank you very much, Robin and Michael. I didn't see we just right in time, but if there's some more question, I still can open the floor. So, but if not, then maybe I think I don't have to wrap up right now. We can conclude the session. Please join me to give applause to Robin and Michael for the very comprehensive presentation. And I think I have a lot of knowledge to understand the Philippines and how the international effort to push the financial inclusion. Thank you very much. And then I think now we come back to the MC. Yeah. And then I think with this ending the session 2, we finish our webinar for today. And then we will join you again tomorrow at like this time, that 1:45 p.m. Tokyo time, and or 2 p.m. sharp, we will open the webinar again tomorrow. There's no opening, so we just directly go to the session tomorrow. Thank you very much, everyone, for very fruitful discussion today, and I hope I will see you again tomorrow with some more knowledge, some more country case from. Didi Kim, you here? Thank you. You should be. Thank you. If you have something to say, please go ahead.
Oh, no. So I think we had very good discussion on the financial inclusion and digital finance. So we will continue our discussion tomorrow. So I hope you all stay well and stay healthy, and see you tomorrow in the afternoon. Thank you very much for your active participation today.
Okay. Thank you. Thank you, Peter. Thank you. Hi, Randir. And thank you, everyone. And see you tomorrow.
Bye.
Bye.
Thank you.
Hi, Vidya, Derek, everyone. All right. We survived the day. Thank you very much. Yeah, but I think that's good. So we encourage people to put the question on the Q&A first, or they give indication on the box, so we can promote them. But they still sometimes when we call them, they're not there, or they something with the computer. So, but I think that's good, and we